Well, as you can see, Reliance Industries has been underperforming the benchmark beat in the last 1 month, last 3 months, last 6 months, or the last 12-month period. Now, let's first understand why it has been underperforming. Firstly, the energy business of Reliance Industries that has been going through a lot of volatility because of the geopolitical issues. Along with that, the refining business, since the export tax has been implemented, we have seen the peak of the refining business. The gross refining margins, the Singapore gross refining margins have fallen from its peak of around $30 per barrel now around $1 to $3 per barrel. Along with this, the new energy business where the most of the CAPEX has been going around, there is an execution risk which has been an overhang on the share prices because it's an entirely new business line for Reliance Industries. Now, as I was talking about the CAPEX of the company, if you see during the last CAPEX period, that is from 2009 to 2016, you can clearly see in this chart how the share prices of Reliance Industries were in the range bound, and that was because if you see the company's return on capital employed, that remained weak, and that was one of the reasons why the share price timelines on the IPOs of the two key businesses, that is retail and the telecom division. Now, Street was expecting some timelines to come out in the last AGM, but so far we do not know when this IPO will happen, and most probably in the next AGM they might come out with some details. However, not everything is negative for Reliance Industries. On the positive side, if you see, the telecom business is expected to be aided by the tariff hike, 5G launch, and the broadband boom that we have been seeing in the country. The retail business is benefiting on the back of store expansion, the acquisitions that the company has been doing, and the online business, that is JioMart, has also been seeing some strong action. Now, on the new energy business, now we spoke about the negatives, but on the positive side, if you see, though there is a CAPEX, the balance sheet is pretty much strong for Reliance Industries. The CAPEX is less intensive, and analysts believe that there could be quicker monetization for the new energy business. And lastly, if you check the valuation, now the 12-month forward valuations of Reliance Industries stand at close to 19.3 times as compared to 22.7. That is its 2-year average valuation. Also, when you compare with its peak, at its peak, Reliance Industries 12-month forward PE was at around 30 times, while the current valuations at just 19.3 times. And lastly, if you see the analyst view, the consensus analyst view, the target price stands at close to 2,900 rupees, which suggests a potential upside of at least 22%. And the highest target price for Reliance Industries on the street stands at close to 3,370 rupees, while the lowest target price stands at only 2,000 rupees for Reliance Industries.